Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive right in, take a look, see what's going on today. If you want to follow me at @Finance, and if you want to join our community, finding-value.com, my goal is to get you guys great opportunities put in front of you. You get to decide what you want to do. But my job is to get the opportunities in front of your face and get you guys the confidence in the markets to be able to take entries, to identify opportunities, and to hold on. That's ultimately what it is. I do that through midweek updates where I kind of go through what the opportunities are, and then Q&A sessions where I answer your guys' questions. Sometimes I cover topics in the beginning of those. The last one we talked about was risk. What is risk? And my opinions around it. And then I go into how to control risk, which is basically everything that I've deployed is about controlling risk. If that interests you, finding-value.com special coupon code. You can get $25 off the first month only on a monthly membership, or you can get a $100 discount on the yearly membership. And I think it's worth it. We're up quite a bit. When I say we, everyone in the community is somewhere between 30% and 120% year-to-date returns, somewhere in that range, depending on how you set up the portfolio, how you weighted it. Obviously, we don't all have the same portfolios. Some people are a little bit more heavily into the speculative stuff. I'm kind of in the middle, so my returns will be in the middle. I'm not over 100% this year, but I'm between. Most of my portfolios are between 50 and 70%, somewhere in that range, high 40s up to 70s. I've got 4 or 5 different portfolios. So yeah, hit that up if you guys would like. So coming on, we got Weimar Silver Baron. It says Bank of America just dropped jaw-dropping forecasts. Silver at $65 an ounce, gold at 5,000 in 2026. So it's raising its 2026 forecast for gold to 5,000, silver to 65, citing a potent mix of supply tightness, policy uncertainty, and a surge in investment demand that's showing no signs of slowing. Is this good? Should I worry that they're starting to post bullish stuff about precious metals and about whatever I'm in? Most of the time, they post pretty bearish stuff. I mean, for most of the time. Um, I am surprised that they're coming out with this now because, I mean, don't they have any technical chartists at Bank of America saying, do you see this pattern here? We are about to launch. Maybe they wait right before it when people get excited and then they get more clicks, I guess. I don't know. But I look at the big cup and handle. I'm like, this thing's going. I saw that back in 2011 when we were at the highs there. I was like, man, this cup and handle, if this ever forms and plays out, it's going to be ridiculous opportunity. I saw it all the way back then. We had a big pullback off of 50 um, coming on down. And that's when I can remember Hubert Mullman posted a fractal analysis on silver that went all the way up into like $1,000 an ounce area. And I was like, man, that thing is ridiculous. Because it looked like it was a legit fractal and it looked like it could do something like that. I'm not stating that that's where it's going to go, but it's possible. I mean, I'm not saying it's not impossible. But that was one of the first times I saw it. And I was like, man, that looks ridiculous. I think it was after 2011. It was probably like 2013 or something, or 12, or I don't know, somewhere when it came back down. But he posted that fractal. I saw the big cup and handle, and I was like, man, this is a huge opportunity. So I waited a little bit before getting in big. But yeah, maybe those guys over at Bank of America, those technical analysis guys, maybe they're a little bit too busy smelling their own farts or something. I don't know. I don't know. The updated silver to S&P 500 ratio chart increasingly suggests the early stages of a major cycle where silver outperforms US equities. Yeah, I could see that. While many investors have been conditioned to expect the opposite, this chart highlights just how early we might be in a broader trend of capital rotating into hard assets. Silver underperforming US equities. Now it's outperforming. Now it's underperforming. And now we are bottoming. Now this is a double bottom. Bottom one, bottom two, and we are coming on up. What does it mean? Why does this matter? Well, it means we should be in silver. That's what it means. Not the S&P 500. We should be in gold and silver and hard assets and precious metals and commodities. This is the cycle. This movement up and down and up and down, that's the cycle. It is that simple, guys. Now, what happens is people buy down here and then they get bored and they're like, oh, it's not going up. And then if the S&P goes up a little bit, like this little move here, they'll be like, oh, I want to go back in the S&P. It's like, oh my gosh, guys. It's like they're just chasing price wherever they can. The big long-term charts is where the big money's made. And in order to make big money, in order to make big money, you need to get the big trends right. You need to buy early, you need to buy low, and you need to have staying power. You need to be able to hold on to the damn asset that you purchased. If you can't hold on, well, you don't deserve big money. Big money is made by those who take action when others are unwilling. Big money is made by those who can hold irrespective of what's going on around him. Those who make big money are able to ride and not sell at a double or a triple or a quadruple. There's a lot of people, and I don't know what it is. I don't know if it's personality traits. I don't know if it's they just don't understand the cycle. I don't know. But they want to take profits after 100 or 200% gain right at the beginning of the largest cup and handle pattern I've ever seen. Like we're just breaking out. And people are like, well, should I take profits here? And I'm like, no, I wouldn't. Now, I can't tell other people what to do, but I wouldn't. You know, this pattern here, guys, this 50-year cup and handle pattern, this one here that's breaking out right now, this is only going to happen one time in your life. You're never going to be able to go back and buy silver at $18 an ounce in 2018 or $14 or $15 an ounce back then. You're not going to be able to go back there and buy silver at that price ever again. It is gone. When this thing unwinds to the upside, you get one shot of a 45-year cup and handle pattern. We, including myself, won't be alive again if we go into another consolidation of this size. We had this consolidation way back here. It went from a peak of, I see January, this must, okay, 1850 it peaked, and we bottomed in 1933. This decline was an entire human's life. Their entire life, they were in a decline of silver price. Then, people born in the 30s and 40s had 40-year bull market all the way to 1980 of basically their entire life, well, not entire life, maybe half their life, of a bull market in silver. And we just are coming out of a big cup and handle pattern to the upside. One maybe could state that the rest of my life, we could see a bull market in gold and silver, perhaps. And that when we break this pattern, we could see increasing interest rates, which is the driver of this, occur for many years. Maybe 20 more years, maybe 40 more years. I'm not exactly sure. I don't know if the currency can handle it. I don't know. Why would I sell something that's at the beginning? This is like the opportunity of my lifetime. Let's say it was a job interview. It was the greatest opportunity of your life. You get into the place to do the interview and then you leave before you even do the interview. And you're like, what are you doing? Like, don't you want to interview and get the position? Like, don't you want to go through it? Like, we're right at the beginning of this big move, and it's like this is like we waited for all of this, and you want to take profits like right at the beginning of the move? Guys, this is big. Like, let it make you money. Let it make you money. Don't be you know, money's going to come to you when you're ready, but you got to be ready here because these opportunities don't come. Coming down, ExxonMobil CEO, he says 15% annual decline risk in oil. Darren Wood says today's oil glut is short term. Without new investment, supply could fall 15% per year, tightening markets fast. Brent at 65 now, but Woods warns the real shock comes later this decade. Boom! I totally agree. The end of 2020s is going to be EWE. It's not even the life we're living today may not even be recognizable. That's how serious this is. Cheap oil today is tomorrow's shortage. We're going to get tight here. We're going to get real tight. On the back half of this of 2020s, it's going to get real interesting. So I know a lot of people are very, very bearish on oil. Some people say, oil hasn't bottomed yet. I hate to tell you guys, but the equities have already bottomed. They're already heading higher. They bottomed back in March and May of 2025. They put in bottoming patterns. Most of them are inverted shoulder head shoulders, and a lot of them have W bottoms or double bottoms. And they're up around resistance areas trying to put in another shoulder. There might be, maybe luckily, there may be a few that are still down. A few. Most of the really strong companies are all up. And they're up this year too. They are not down this year. They are up, even though oil hasn't really moved. Exploding commodity demand, 2025 to 2050. So key metals and simplified growth projections. This is Canada's role in the coming resource boom. Here's a summary of the projected demand growth for each metal using 2024 as the baseline and estimating the growth by 2050. Cobalt, 100% increase. Copper, 50 to 80%. Now keep in mind, copper, they produce a lot of copper right now. So 50 to 80% of a gigantic number is a very gigantic number. Graphite is 250 to 300%. Lithium is 600% plus demand by 2050. Nickel, 100%. Rare earths, 200%. Silver, 100%. Uranium, 200%. Now, does this percentage mean that you're going to get the biggest gains in some of these? Not necessarily. Now, I have gone through a lot of the companies that have these and produce these materials. We are actively engaged in copper. We do have cobalt, but it's in diversified miners. But copper, graphite, got some picks there. We're heavily in lithium. I've got good picks there. We have a couple of nickel plays, few rare earths. We've got, silver and uranium for sure. So we're covering the majority of this. And I think I've got the best developers for lithium. I think I've got some of the better developers with big deposits in graphite. I think we've got the best copper miner. We have some nickel, second largest deposit in the world of a developer. We have rare earths. Now, rare earths is a little bit tougher. There's not as many options there. And then I've got silver covered with the developers and producers there. So yeah, I think we've got it covered on the website there on a lot of these. At bottoms, everyone gets negative, and they can't buy when I give the signal to pull the trigger. At tops, even after making hundreds of percent gains, they are unable to take profits and be happy. Why? Because at tops, everyone has become convinced that the price can never go back down. The fundamentals are different this time. Remember a couple of years ago when everyone was telling me the price of uranium couldn't go down. Profit-taking events have nothing to do with fundamentals. They are driven by sentiment. At some point, everyone that is going to buy has bought. There's no one left to buy. At that point, price either has to correct and go down, or it has to churn sideways for an extended period of time. EXPEC Silver is going to break through $50 to draw in the last FOMO buyers and then turn back down or go sideways for an extended period of time. But understand, I'm not calling a top in the bull market. Silver is going to $100 and probably $250 to $500 before the bull is over. But it is very late in its stretched intermediate cycle. Sentiment is wildly bullish, and everyone has now bought into the narrative that this time is different, that there is a shortage of silver. There is a shortage in London, but there's a glut of silver in the United States. That's why you see bullion dealers offering sales on silver. When there's a glut in one part of the world and shortage in another, eventually silver will flow to where the shortages are and correct the imbalance. So be cautious here. If we get a breakout above 50 and a reversal back below, it pretty quickly, that is a major warning sign that big money just sold into the breakout. And keep in mind, we never sell our physical, only our leveraged trades. We will sell our physical only when we are deep into the bubble phase, and that is still 1 to 3 years away, according to Gary Savage. What do you guys think about that? I don't know. I mean, I'm not buying anything new up here, so I'm not risking any new money. I'm also not selling anything. Obviously, I hold my physical. I'm not too worried about that at the moment. The ratios are cheap for silver to gold. Really, I'm not too worried. A lot of the charts, the junior mining company charts, they're pretty early in their move. They're putting in bottoming patterns and coming out of the bottoming patterns, depending on which ones you're looking at. So I think we're early in the move still for at least the junior companies. But that doesn't mean that silver is going to go up, forever. We could chop sideways, and the producers would continue to make higher earnings even if we chop sideways. So the miners still look good, even if we chop sideways on the price for any length of time. Coming down, break wave. Look at dry bulk this morning. Dry bulk Capesize up 9%, Panamax up 7%. Tankers are both up, VLCC up 1%, Suezmax up 2%. But dry bulk, my lord, look at that. That's ripping. Investment wisdom. What we learn from history is that people don't learn from history. I thought that was kind of funny. What we learn is that people don't learn. Got it. Rick Roll says, most of the money I've made in my life has come from being contrarian, from buying hate. The gold and silver markets aren't hated anymore. Oil is hated, and I'm very attracted to that. I would say that's a thumb up. I agree with it. A lot of people, if you look at the comments, like I went on Capital Cosm last week, and if you look at the comments, everyone is very bullish, gold and silver. Everybody's parroting other YouTube channels and quotes of what other people think. No original thought. No original thought goes into it. I'm bullish on oil. I'm bullish on things that people aren't really looking at. And they'll tell you, well, that's no good to buy. It's too early. We're going to have we're going to go into a recession. They've got all these narratives and all these reasons. Well, then my question back would be, why is smart money accumulating it? And if you can't tell that smart money is accumulating it, you need to add skills to your repertoire, to your cabinet there. You need to get the skills in order to identify when smart money is accumulating. Smart money accumulates and they don't tell you about it. They don't write articles about it. They don't write and show articles that smart money is accumulating oil, but they will drop this out. Silver at 65, gold at 5,000. They're getting people pumped. You can't get pumped by articles. You need to get pumped by patterns. By patterns, accumulation, and smart money accumulating at bottoms. You want to accumulate when big money accumulates. So how do you figure out when big money accumulates? That's the question you need to answer if you want to be successful. You accumulate when smart money accumulates. You're patient. You wait for other people to come in and FOMO buy, and then you sell at the end to retail investors who are going to tell you that this is the best investment because it's gone up for 5 years straight. That's how it works. Come down, Peter Brandt. He says, wherever the current bull market in U.S. equities ends, and it will end, expect at least 8 to 10 years of no gains. He shows no gains between these time frames. Commodity bull market, commodity bull market, commodity bull market, and then we're going into a commodity bull market. Stock spends more time in chop than in gain periods. We're going to have a big commodity bull market, precious metals, all of it. We're going to chop. This is the great restructuring there. We're going to chop sideways on the Dow Jones that he's got there, and precious metals are going to go up. Bonds are also going to go down. This is the great rotation. The great rotation occurs when a large portion of investments do not work. If bonds don't work and stocks don't work, it means that more money is going to rotate into other things. The higher number of things that don't work. So let's just hypothetically, okay? So hypothetically, if bonds don't work, the S&P doesn't work, the Dow Jones doesn't work, the Nasdaq doesn't work, and crypto doesn't work all at the same time, and if people are programmed to chase price, and let's say precious metals are rocketing higher, and commodities with the bottoming patterns that we're seeing start to move up, all of those things that are inflicting pain into the portfolios that hold NASDAQ, crypto, and all these other ones, they're going to start to look somewhere else. And they're going to chase price performance because everyone understands and knows price, and no one knows jack crap about value. So what are they going to do? That is going to provide the funds and money flows into the assets that we purchased at the bottom in 2020 and 2021, 2, 3, 4, and 5. That's the rotation. That's how it works. It's that simple. It is literally that simple. The problem that people have is if we continue to go up a little bit in the stock market or in AI, people will say, well, other people are making money over there. And if your thing isn't going up at that exact moment, they want to get drawn into that price movement. The problem is it's overvalued as heck over there. And that's where all the risk is. The risk is where retail is located. Where's retail located? AI, crypto? I mean, look at all the people who blew up on smelly fart coin. Or I don't even know the other coins. Like, they're the stupidest thing I've ever seen in my life. Why are you over there? I mean, honestly, what is going on? Anyway, that's what I think the rotation is going to come. That's what's going to happen. Money's going to rotate into stuff that at least that I own and that a lot of us own on the website. And that's where our returns are going to come from. That's the money flows coming in, driving up price. People who succeed in the stock market also accept periodic losses, setbacks, and unexpected occurrences. Calamitous drops do not scare them out of the game. That tweet on Friday, we had a pretty big selling pressure day across the board. You don't get scared out of the game. How are you able to hold through these big drops? I can tell you how. One, you need to learn the game. If you understand how the game is played, Then you can learn how to hold through these things. You need to understand that things move in cycles. So you've got cycles. You can buy low and it's cheap. Well, that's easy to hold. I know it's cheap. If you know you're at the bottom of the cycle, you know you're buying an undervalued asset, and that you know that something comes out of left field to get a big, strong selling pressure day, you know that you can hold through it because you know where you're located in the cycle, you know that of what you own, and you know the game that it's going to come into. Uh, it's going to come into favor your sectors that you're in, and that money's going to flow into it. You know interest rates. You know where the money is and isn't. Cough cough ratios, and then you know that game. You know how to play the game. So what happens is when you don't know anything about what you own and you don't know that there's cycles, you don't know what's cheap and what's expensive. So basically you're in the dark. That's when people get scared. They don't know what they own. They don't know their cycles. They don't know if they own is good or bad. And then they get slaughtered. And then they sell at the bottoms and buy at tops. Here's Renko of silver. A weekly Renko chart, 45-year breakout is triggered on the last Renko block. There we go, ripping higher. It's happening. Is it like this? Silver futures are breaking higher perhaps here and moving on out. So I'm just showing other people's opinions. Now, someone would ask, well, should I buy silver up here? Everything in the market is about a function of opportunity. Opportunity. And it's a function of controlling risk. So how good is the opportunity? How much risk is there? So as we break out of this, what I'm doing is I'm holding my positions. I'm not adding new ones. Now, could we break out and run to 40, from 40 something, 48, 49 bucks all the way up to 60, 70 bucks, 80 bucks, 90 bucks, 100 bucks? Sure, we could. But was that the ideal entry point? No, it wasn't. Your ideal entry point, if you were really, really good, your ideal entry point would have been in 2022, 2023, 2024. And you should have been looking at the equity charts, buying bottoms across the board. That would have been ideal. Now it's run up quite a bit. We have a lot of stocks that are up 300, 400, 500, 600, 700%. Are those good entry points? Your risk reward's a lot different now. And now there's other opportunities that people aren't looking at. So everything is a function of opportunity. So if someone said, well, I want to go run at this because it's going up, that's not a good reason to buy something. A good reason to buy something is when you can go through a list almost and say, well, here are my reasons buying it, and it's really incredibly low in a sector that nobody likes. So yes, I think silver is going to go up, but me personally, I wouldn't be dive bombing in at this exact location. If it's me, I would have already been positioned. Exxon is right. Underinvestment will eventually lead to much higher oil prices. Agreed. Here's Grady. He says, been saying that silver is now aiming for the all-time highs. And now it has made that new all-time high. And it is at present above important $48 level. Historical chart and price action. Also been saying for long that silver is climbing the right side of a huge rounded bottom arc in link post below, and the pattern is now completed. Said for long that one needed to understand that the up move is very different from previous up moves. The chart was now finally ready. That is the difference. Price cannot move big until the chart is ready, and it was ready now. During silver's recent up move, most have been, as usual, preoccupied with listening to attention-seeking narratives about massive impending stock market crash, constant talk about metals manipulation, and the US dollar going to the moon. How did that work out? Instead of just looking at price and understanding what is actually happening. So here's silver. Monthly candlestick ripping higher, breaking through that all important $48 level. He shows where they purchased at the service. We purchased all through, well, we didn't do silver, the physical silver. We were doing a lot of the equities. And the equities, what we did is we took the best setups in 2022, a lot of the producers. 23, 24, we were dipping our toes into the junior companies that were putting in bottoming patterns. And then 2025, there were still a few junior companies that had really good entry points. So we took advantage of those that were lagging behind. Now, there's not that many left that are, I would say, at ideal entry points. There's very few. So we kind of went through that whole gamut of how we loaded up over time there. Because okay, it says how can a top 25 token go down 99% on a full rug pull? Garrett says, because it's a digital token backed by nothing, just like Bitcoin. I love it, guys. I love it. At least someone's got something, some sort of brain up there. I love it. Guys, these are just garbage. I don't know why anybody's in them. I don't get it. And I hate to say it, but this is a function of where we're at in the cycle. There's so much liquidity out there that people are literally just gambling on whatever they can. That's what they're doing. President Trump just said, don't worry about China. It will all be fine. Z doesn't want a depression for his country, and neither do I. Well, these tweets are getting a little bit ridiculous. That's where I'm going to end it. It's right there. I'm not going to make a comment here. And that's all I've got. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Special with the coupon code. And that's all I've got. So we'll catch you next time, guys. See ya.